Welcome to the deep dive. Ever heard of natural nuclear reactors?
Natural reactors
Yeah.
sounds wild.
Right. But believe it or not, billions of years ago, way back, in a place in Gabon, Africa, called Oklo, they actually existed.
Seriously.
Spontaneous nuclear fission. Just
Yeah.
nature doing its thing. Now fast forward, and there's this company also called Oklo.
The name connection. Clever.
Exactly. And they're trying to harness that same fundamental power, basically, to revolutionize our energy.
So advanced fission power plants.
Yep. Aimed at meeting, the massive energy demands we have now, everything from your phone to these giant data centers.
Which are getting more and more power hungry.
Totally. So for this deep dive, we've pulled together a whole range of sources, company reports, market analyses, the works, to give you a really clear, hopefully engaging picture of what Oklo is all about.
It's quite a story, linking that ancient phenomenon in Gabon with a modern tech company trying to tackle today's energy challenges really puts their goals into perspective.
Okay, so let's start by getting a handle on the business itself. Oklo Inc., ticker's OKLO on the NYSE,
Yep.
founded in 2013, but they just went public May 2024 via a SPAC.
Right, the special purpose acquisition company route. A faster way to market sometimes.
Their main thing. Developing and, crucially, deploying compact fast reactors. The flagship is the Aurora powerhouse.
And the mission sounds pretty straightforward, right? Clean, reliable, affordable energy at scale.
Exactly. Which, is incredibly relevant right now with the push for decarbonization and energy security.
Definitely. There's a huge need for that kind of clean, consistent baseload power, especially for things like data centers.
And here's where their approach gets, pretty different. They're not just selling reactors.
No, they're doing the build-own-operate thing.
All right. They build the Aurora plant, they own it, they run it, then they sell the power directly to customers.
Through power purchase agreements or PPAs.
Yeah, long-term deals. They've actually said they prefer PPAs over just selling the reactor hardware.
That energy as a service model makes sense. Lowers the barrier for customers, no massive upfront cost or operating hassle for them.
And gives Oklo a steady revenue stream, assuming it all works.
And it ties into their fuel strategy, too. Gives them more control. Plus, they're not just stopping at power generation, they're pushing into nuclear fuel recycling tech.
Right, which could be huge for sustainability and costs.
And they recently bought Atomic Alchemy, moving into radioisotope production, too. Diversifying.
Okay, so let's look at it from, say, a value investing angle. Some sources definitely do. The core idea is
Long-term value creation, right?
Yeah.
Tapping into that need for clean baseload power, especially for AI data centers.
Exactly. But it all hangs on execution. Can they actually build these things commercially, get through the regulations, make the economics work?
That's the multi-billion-dollar question, isn't it? For you listening, how much do you weigh that future potential against the risks? Pre-revenue, complex tech, heavy regulation?
A traditional value investor would want a serious margin of safety here.
No doubt.
So specifics. Public on NYSE, ticker OKLO, based in Santa Clara, California.
Silicon Valley roots.
Yep. And their target customers. Big energy users, data centers, especially AI ones, remote communities off the grid, industrial plants, government sites.
Pretty broad range.
And they've built up this pipeline, potential PPAs, letters of intent, totaling over 14 gigawatts.
Wow, 14 gigabit. That's ambitious.
It really stood out to me, too. What does that number actually signal, though?
Well, it signals huge potential demand, clearly. But you got to remember, LOIs aren't contracts.
True. Just potential.
Converting those into real operating plants is the key hurdle. Definitely something to watch.
Some examples they've mentioned, a non-binding one with Switch, potentially up to 12 GW.
That's massive.
The letter of intent with Diamondback Energy in the Permian Basin, being hyperscale for a data center campus, and one that feels a bit more solid, a partnership with Equinix for 500 milliW, and Equinix put down a $25 million prepayment.
Okay, that prepayment is interesting. A tangible sign of commitment helps de-risk things a little, maybe.
Still, that 12 GW potential with Switch. It just shows the scale they're aiming for and the massive capital that implies.
Absolutely. Huge capital needs if that comes to pass.
Okay, let's dive into the tech itself. The Aurora powerhouse. It's a fast neutron reactor, uses liquid sodium as the coolant.
Right, and the fast neutron part is important.
Why is that?
Well, it means it can use fuel more efficiently. It can even burn stuff that regular reactors can't, like some nuclear waste components. Potentially makes the fuel supply more flexible, more secure down the road.
Gotcha. And safety.
Big focus there.
Yeah.
It has inherent safety features, passive systems,
Meaning?
meaning they rely on natural physics, gravity, convection to shut down or cool the reactor if something goes wrong. They don't need external power to activate. Think automatic brakes.
Okay, that makes sense.
And using sodium as a coolant, it's very good at transferring heat.
Yeah.
Efficient. Also helps with safety. These passive systems are a major selling point. Less reliance on complex active components.
And scalability. They started talking 15 to 50 megawatts electric.
Right, but now they're saying up to 75 milliway, maybe even 100 plus eventually.
And they run for a long time without refueling.
Yeah, potentially 10 to 20 years. Think nuclear subs, they go ages between refueling. Similar idea here. Cuts down on downtime, logistics, costs.
That long cycle sounds like a big operational plus, and the scalability helps them target different customer sizes.
Definitely.
So how do they plan to make this cost competitive? Nuclear usually sounds expensive.
Good question. Key strategies. Simplified design, it operates at atmospheric pressure, not high pressure.
Which makes engineering easier, cheaper materials.
Exactly. Also, factory fabrication building modules in a factory, like an assembly line, then shipping them. And using modern supply chains.
Any cost estimates?
Early ones put a 15 milliway unit around $70 million, but that was early. Factory building is key for potential economies of scale later.
And this tech isn't totally out of the blue, right? It has some history.
Correct. It draws heavily from the Experimental Breeder Reactor 2, EBR-2.
Which ran for
30 years.
Yeah.
At Idaho National Laboratory. So Oklo is leveraging decades of real-world data on fast reactor performance, safety.
That seems important. Building on something proven.
It definitely helps de-risk the technology, at least in theory. Gives regulators and customers more confidence.
Yeah.
But, taking those old principles and putting them into a new, small commercial design, that still has its own challenges. Engineering, economics.
And they're skipping the demo plant step, going straight to commercial.
That's the plan. A bolder move.
Okay, fuel. Critical piece. What are they using?
Designed for HLEU, high-assay, low-enriched uranium, or recycled fuel.
HALEU, isn't that kind of new, hard to get?
The supply chain is still developing, yes, that's a risk. For their first plant, though, they plan to use existing metallic fuel left over from that old EBR-2 reactor.
Aha, using up old stock. Smart.
It gets them started. But long-term, they need HALEU. They do have a supply deal with Centrus Energy.
Who are the only licensed U.S. producer right now?
That's right. So near-term supply relies heavily on Centrus. The HALEU availability is definitely a potential bottleneck for the whole advanced reactor industry, not just Oklo.
But Oklo has a longer-term plan for fuel, right? Recycling.
They do. A very ambitious one. In-house advanced recycling using a process called electrorefining.
What's special about their process?
Key thing. It's designed not to separate out pure plutonium. That's a big deal for preventing nuclear proliferation concerns.
Oh, okay. Then the benefits.
Potentially huge.
Yeah.
They project cutting high-level waste volume by over 10 times and saving maybe up to 80% on fuel costs.
Wow. 80% savings. That would be a game changer.
Absolutely. If they can make the recycling tech work economically at scale, it tackles waste and fuel costs, two massive hurdles for nuclear. Could make it much more sustainable.
Are they doing this alone?
No, they're collaborating with the Department of Energy, Argonne National Lab, Idaho National Lab, tapping into that expertise.
Have they shown it works?
They completed a successful end-to-end demo of the process back in July 2024, and they've announced plans for a commercial-scale Oklo fuel foundry.
So, collaborating with labs, successful demo, planning a factory. Those are real steps forward on the field front. Could reduce their reliance on mining new uranium eventually.
It's a critical part of their long-term vision. Let's shift gears to the people running the show, the management team.
Okay. Who's in charge?
Well, you have the co-founders, Jacob DeWitt, he's CEO and chairman, strong background in reactor design, fuel cycles.
Right.
And Caroline Cochran, she's COO and on the board, multiple founder experience. She was on the DOE's Nuclear Energy Advisory Committee, too.
So technical and operational background from the founders.
Yeah. Then for finance, the CFO is R. Craig Bielmeier. Came on board August 2023. Lots of experience from Renewable Energy Group, BP.
Okay. Big energy finance background.
Chief Product Officer is Alexander Renner. Joined June 2024. Really valuable background. Former NRC reactor engineer, project manager, inspector. Knows the regulatory side.
That NRC experience seems crucial.
Absolutely. And the CTO, Patrick Schweiger, joined in 2025. Over 40 years in energy fission and fusion. Leadership roles at places like Hedron, Commonwealth Fusion, TerraPower. holds multiple patents.
Wow, quite a resume. Fusion experience, too.
So, yeah, looks like a very well-rounded team. Founders bring the core tech vision. Others add the finance, regulatory, project execution chops. All essential for, getting something this complex off the ground.
Team's strong on paper, but let's talk insider trading. Value investors always look at this.
Right. There have been reports of stock sales by both DeWitt and Cochrane since the SPAC merger.
DeWitt's net worth was estimated pretty high, like $576 million back in May 2025, holding a lot of OKLO stock. But still, sales going back to 2021 reported. Cochrane selling recently, too.
Yeah. And that always raises eyebrows, especially for a pre-commercial company. Does it signal a lack of confidence? Or maybe they think the stock's run up enough?
Or are there other reasons?
There can be. Exercising options, tax bills, just wanting some personal liquidity, diversification, perfectly normal reasons.
But the perception matters. Right.
It does. Investors want to see management aligned with long-term value. Consistent selling can sometimes undermine that perception. Transparency about why they're selling would certainly help reassure investors.
Okay, let's dig into the financials, the numbers. As we said, pre-revenue.
Yep. Q1 2025, zero operational revenue, exactly what analysts expected. The focus isn't revenue yet, it's managing cash burn and hitting milestones.
Right, and the spending, operating expenses.
Pretty significant.
Yeah.
Operating loss was $17.9 million in Q1 2025. That included $2.3 million in non-cash stock compensation.
And for all of 2024.
The operating loss was $52.8 million.
Net loss.
Q1 2025 net loss was $9.8 million, which was actually better than the $24 million loss in Q1 2024.
Oh, improvement there.
Yeah, loss per share was -7 cents, also better than consensus. But for the full year 2024, the net loss was still substantial, $73.6 million.
So still burning through cash, but maybe the loss narrowed a bit year over year in Q1, reflects all that R&D, regulatory work, building the team.
Exactly. Big investments needed upfront. The reduced net loss is positive, but the burn rate is still high.
What about cash flow specifically? Cash used in operations.
$12.2 million used in Q1 2025. That's up from $7.3 million in Q1 2024. For the full year 2024, it was $38.4 million used.
So cash burn from operations actually increased year over year in Q1, suggests they're ramping up activity.
Likely. More development, maybe moving towards building things. Investors will want to see tangible progress from that spending.
Okay, liquidity. How much cash do they have?
As of end of March 2025, a healthy $250.7 million in cash and marketable securities, down just slightly from $275.3 million at the end of 2024.
That's a decent cushion.
It is. And their current ratio, which measures short-term assets versus liabilities, is super high, like 43.7 based on some data.
Why so high?
Mostly because of all that cash and very low current liabilities. They have way more cash than debt right now.
Speaking of debt.
Minimal long-term debt, about $500,000 as of December 2024. Very low leverage.
Okay, so strong cash position, low debt. But what about things like the Altman Z-score? That bankruptcy predictor.
Ah, yes. That came in at 0.004 for Dexon 2024, which is technically in the distress zone.
Uh-oh.
Well, hold on. That score often doesn't work well for pre-revenue growth companies like Oklo. It's more reflecting their current lack of profits than an immediate bankruptcy risk, especially given their cash pile.
Right. Context matters.
Exactly. And interestingly, another score, the Alpha Spread Solvency score, was really high, 81 out of 100. That probably reflects the strong cash and low debt better.
So conflicting signals from different metrics need to interpret carefully.
Precisely. The Altman Z shows the limits of traditional models here.
What are they guiding for cash burn for the rest of 2025?
They expect to burn between $65 million and $80 million for the full year.
So that cash pile will shrink significantly by year end.
Yes. And they've openly said they'll need significant additional funding later for the big commercial rollout. That build-own-operate model is capital-intensive.
How would they get that? More stock sales?
Yeah,
Debt?
probably a mix. They're exploring off-balance sheet funding, specifically for atomic alchemy, that radioisotope acquisition.
Ah, keep that separate maybe? Preserve cash for the reactors.
It seems like a potential strategy, smart capital allocation.
Okay, let's move into the second half. Market sentiment. How's the stock been doing?
Well, as of May 13th, 2025, the price was $32.03. Had a good day, up 11%. Strong run-up in the weeks before, too.
So, some positive momentum recently suggests growing investor interest, maybe positive news.
Could be, but you have to zoom out. This stock is extremely volatile.
How volatile?
The 52-week range was $5.35 on the low end, up to $59.14 on the high end. Huge swings. High daily volatility, too.
Wow, that's a roller coaster. What of technical analysis, charts and patterns?
Kind of a mixed bag. Some see support around $30, resistance maybe $32, $35. But some technical models were actually projecting a negative short-term trend, like down 25% over the next 3 months.
So technicals are confusing. Not unusual for this kind of stock, right? Speculative growth, emerging tech.
Exactly. High volatility, uncertain near-term direction.
What's the options market saying? People betting on future prices.
Interesting stuff there. The put-call ratio was below 1. Generally means more open interest in calls, bets the price goes up, than puts, bets that goes down. So net bullish sentiment among open positions.
Okay.
And lots of activity in those call options. Plus, the implied volatility is sky high, over 114%.
Meaning the market expects big price moves.
Yes. Options traders are pricing in the potential for major swings up or down. The call activity suggests more leaning bullish, but the high IV reflects the massive uncertainty.
But on the flip side, short interest, people betting against the stock.
Very high. Around 14.93% of the float shorted. That's a significant chunk of the market betting the price will fall.
But how quickly could they cover if the price jumps? The days to cover.
Relatively low, actually. About 1 day. So while a short squeeze is possible, it might not last long based on that metric alone.
And lots of shorting happening off exchange.
Yeah, high off exchange short volume ratio. Could indicate more sophisticated institutional short strategies.
So high short interest shows strong bearish sentiment from one part of the market. Low days to cover suggests maybe less risk of a prolonged squeeze. It's a real tug of war.
Absolutely. Bullish options activity versus high short interest. Classic battleground stock scenario.
Okay, let's look at who actually owns OKO shares. Ownership structure.
Institutions hold about 32%, roughly 330 different institutions.
Any big names?
Yeah, Data Collective, UBT, MyArray Asset, they run the Global X Uranium ETF, Vanguard, Tiger Global, Susquehanna, VanEck, through their Uranium Plus Nuclear Energy ETF.
Those thematic ETFs are interesting. Shows it's part of that broader nuclear energy investment theme.
Definitely. That level of institutional interest means the pros are paying attention. The ETF inclusion links it to sector trends.
What about insiders? The founders, management?
Also substantial, around 42%. We mentioned DeWitt and Cochrane each hold roughly 18%.
And the rest, retail investors.
Yep, a big chunk. Around 44% held by retail.
So high insider ownership, normally good for alignment. But we talked about the sales, significant retail ownership too, which can add to volatility.
Can do, yeah. Retail sentiment can swing quickly based on news or general market mood.
Any recent shifts in who's holding? Institutions buying or selling?
In the last quarter reported, more institutions added Oklo to their portfolio than cut their positions. Susquehanna was a notable buyer. On the other side, firms like Encompass, Height Hedge, and Data Collective FujiP trim their stakes.
So institutions are actively trading it, reevaluating, constant flux.
As you'd expect, they're weighing the risks and potential rewards continuously.
Okay, let's try to pull this all together. A quick SWOT analysis. Strengths, weaknesses, opportunities, threats.
Good idea. Strengths.
Yeah.
You've got the tech basis from EBR2, that fuel recycling potential, the build-own-operate model, the customer pipeline, experienced team, aiming for cost competitiveness.
Weaknesses.
Pre-revenue status is the big one. That past NRC license denial need to overcome that history. Heavy reliance on getting future regulatory approvals. Long timelines for nuclear projects, HALEU fuel supply risk we discussed. And it's very capital intensive.
Opportunities.
Huge demand from AI and data centers. Government support potentially growing for advanced nuclear. The radioisotope market via atomic alchemy, being a first mover maybe. And the whole global decarbonization push.
And threats.
Lots of competition in energy. Regulatory delays are always a risk. Public perception of nuclear can be tricky. Technology failures. Funding drying up. A bad economy. Supply chain problems.
And those new U.S. tariffs from 2025?
Right. That's a specific threat. Could raise costs for imported steel, aluminum, special parts, maybe even uranium, impacting HALEU.
How much impact?
One estimate suggested maybe a 6% increase in SMR project costs by 2030, plus potential supply chain headaches.
How can Oklo fight that?
Their mitigation could be focusing domestically. Atomic Alchemy is U.S.-based. Their lab partners, Centrus for HALEU. And long-term, that in-house fuel recycling reduces reliance on imports.
So tariffs add another layer of cost and supply chain risk. Domestic focus and recycling help, but it's a near-term challenge.
Definitely. So that SWOT gives a snapshot, right?
Yeah.
Solid potential strength, but significant weaknesses and external threats to navigate. Huge opportunities if they execute well.
Okay, so wrapping this up, brief conclusion. Oklo is, well, Undeniably innovative, huge potential in advanced nuclear.
But facing equally huge hurdles, technology, regulation, money, it's a tough road. And the current market valuation seems to price in a lot of success already.
Right. From that value investing perspective we touched on, doesn't seem like much margin of safety right now.
It's a long game in nuclear. A marathon, not a sprint. They have an ambitious plan, but execution against all those challenges is everything.
Which brings us to our end hook, the question we want to leave you, the listener, with. After hearing all this, the tech, the strategy, the market dynamics, what do you think are the broader implications for society?
Yeah.
If technologies like Oklo's actually succeed, or if they fail, in meeting our massive growing energy needs sustainably.
And think about that a bit more. Where does reliable, clean baseload power fit in a decarbonizing world? How does advanced nuclear sit alongside solar, wind, batteries?
What's the interplay?
And maybe most importantly, what about public perception? Political will. Will society embrace these new nuclear techs? Is Oklo a vital piece of our energy future? Or is it just a very high-stakes bet in a field full of other clean energy options?
Lots to think about there.
Definitely. Critical questions for the future.
If you found this deep dive useful, maybe spark some thoughts, please do subscribe to the Stock Analytics AI YouTube channel. We do more explorations like this, digging into finance and technology.
And just the usual reminder, this was for informational purposes. It's not research or financial advice. AI tools help prepare the data and summaries we discussed. Always, always do your own thorough independent research before making any investment decisions.